17 banks, one single government order, and a silver market that will never look the same again. India, one of the largest physical silver buyers on this entire planet, just unlocked something. And here is what nobody is telling you. This did not happen by accident. This did not happen overnight. This was planned. 8 metric tons of silver were already sitting at customs just waiting for this exact moment. So the real question is not what India just did. The real question is why now? And the answer to that question will completely change the way you think about silver forever. Welcome to The Hidden Currency, where we find the stories the big channels buried on page 6 and bring them straight to your screen. Now, if you are someone who has lived long enough to know that governments never do anything without a reason, you are exactly who this channel was built for. Do me one small favor. Hit that subscribe button. Think of it like locking your front door at night. You have done it so many times you barely think about it, but the one night you forget is the one night it matters. Just one click. That is all. And before we dive in, drop a comment right now and tell me what city and country you are watching from today. Let us get into it. On a quiet Friday in April, a government document landed on the desks of some of the most powerful banking institutions in India. It did not come with fanfare. There was no press conference, no breaking news alert pushed to millions of phones, no primetime television coverage, just a short official order from a government department that most ordinary people have never heard of, carrying instructions that would send quiet shockwaves through the global silver market. The people who read that order carefully knew immediately that something significant had just shifted. The people who missed it, and most of the world missed it, had no idea that one of the biggest silver stories of the year had just been written in plain government language and filed away where almost nobody would think to look. The document came from the Directorate General of Foreign Trade, a department operating under India's Ministry of Commerce and Industry. What it contained was straightforward on the surface. 17 banks operating inside India had just been officially authorized to import precious metals. The authorization covered a period stretching from April 2025 all the way through to March 2029, 4 full years. And buried inside that authorization, for those who understood what they were reading, was a signal that the global silver market had been waiting for without fully knowing it was waiting. 15 of those 17 banks were authorized to import both gold and silver. The names on that list read like a who's who of Indian and international banking. The State Bank of India was there. So was HDFC. Axis Bank made the list. India Overseas Bank appeared, and notably its authorization was expanded from gold only to now include silver as well. The Industrial and Commercial Bank of China was on the list. The Dutch Bank was there. Federal Bank, Bank of India. 15 institutions all now officially cleared to bring silver flowing into one of the most powerful precious metals demand markets on the face of the earth. To understand why this matters so deeply, one has to understand what India actually represents in the global silver story. India is not a minor player. India is not a supporting character in this market. India is one of the single largest consumers of physical silver anywhere in the world. The country has a deep and ancient cultural relationship with precious metals that runs through weddings, festivals, savings habits, and generational wealth traditions in ways that Western financial analysts consistently underestimate. When India moves towards silver, the global market feels it. When India pulls back, the market feels that too. And when India's government takes a formal, structured, multi-year step toward opening its banking system to silver imports, the market should sit up and pay very close attention. But here's the detail that made this particular story even more significant than the authorization itself. When that Friday order finally arrived, it was already late. The authorization was supposed to be issued at the very start of the financial year, as it normally is every year. This time, it was delayed, and that delay had consequences that were already visible before the ink on the order had dried. More than 5 metric tons of gold and around 8 metric tons of silver were sitting at customs facilities across India, stuck in a bureaucratic holding pattern, unable to clear because the official authorization had not yet been published. 8 metric tons of silver, already physically present, already paid for, already needed, sitting at the border, waiting for a piece of paper to catch up with reality. The moment that order landed, those consignments began moving. A dealer based in Mumbai, speaking privately and without giving his name, confirmed that banks would now be able to begin clearing their shipments from customs. The metal that had been frozen in place was finally free to flow. And what that meant in practical terms was that India was not just opening a door for future silver imports. It was releasing a backlog of pent-up demand that had been building pressure behind a closed gate for weeks. For the men and women who track physical silver flows for a living, that combination, a multi-year banking authorization plus an immediate customs backlog release, was not routine administrative news. It was the kind of structural shift that takes months to fully appear in the data, but begins its work quietly from the very first day. And this particular shift was arriving at a moment when the global silver market was already carrying more pressure than most mainstream financial commentators were willing to acknowledge, because what was happening in India did not exist in isolation. It was connected to something much larger that had been building long before this order was ever signed. There is a small fishing village on the western coast of India where the women have worn silver anklets every single day of their adult lives, not because someone told them to, not because a financial advisor recommended it, but because their mothers wore them, and their grandmothers wore them, and the women before them, going back further than anyone can remember, wore them too. To these women, silver was never an investment. It was never a trading vehicle or a portfolio hedge or a line item on a balance sheet. It was simply real. It was tangible in a way that paper and promises never quite managed to be. And in a country of 1.4 billion people, where that relationship with silver runs through the cultural bloodstream of entire communities across thousands of villages, towns, and cities, the idea that silver is just another commodity to be bought and sold like any other is a misunderstanding so fundamental that it changes how every piece of news coming out of India must be read. Because on April 1st, 2025, something happened in India that went almost completely unnoticed by the global financial media. It was not the bank authorization story, though that came later and mattered enormously. What happened on April 1st was quieter than that, more structural, and in many ways far more significant for the long-term silver story than any single import number or banking order could ever be. On that date, India formally recognized silver as collateral, real, bankable, official collateral. The same status that gold had held for decades inside the Indian financial system was extended to silver. A person could now walk into a bank in India and use their silver holdings the same way they would use gold, as a recognized store of value against which financial transactions could be structured. For people who had spent years arguing that silver was undervalued relative to its historical monetary role, this was not just a policy change. It was a declaration. It was the Indian government, through its financial regulatory framework, essentially telling its population and the global market that silver was no longer simply an industrial metal with some cultural significance. It was money, real money, recognized money. And in a country where the population's relationship with precious metals is as deep and as old as the civilization itself, giving silver that official monetary status was the equivalent of lighting a very large fire in a room already filled with dry wood. The timing of this decision did not exist in a vacuum either. Those who studied it carefully noticed that it arrived alongside another development that had received surprisingly little attention in mainstream coverage. Silver had been added to India's critical minerals list. This was not a ceremonial designation. The critical minerals list is a formal government classification reserved for materials considered essential to national security, economic stability, and strategic industrial capacity. It sits alongside materials that governments protect, stockpile, and prioritize in ways that ordinary commodities never receive. By placing silver on that list, India was signaling something that went beyond banking policy or import authorization. It was signaling that silver had become a matter of national interest. When these two developments are placed side by side, the banking collateral recognition and the critical minerals designation, a picture begins to form that is considerably larger than either headline suggests on its own. India was not simply adjusting a regulatory framework. India was repositioning silver inside its entire economic and strategic worldview, and a country of 1.4 billion people repositioning itself in relation to any asset class is not a footnote. It is a chapter heading in the story of where that market goes next. The analysts who caught all of this early began connecting it to something they had already been watching for months. India's gold imports had risen by nearly 29% in the period running from April to February of the previous financial year. Gold had been surging in price, driven by central bank buying around the world and geopolitical pressures that showed no sign of easing. And as gold climbed higher and higher in price, it began doing something that precious metals have historically always done when they become expensive enough. It began pushing ordinary buyers toward the next best alternative. It began pushing people toward silver. This pattern was not new. It had played out in China already, where retail buyers priced out of the gold market had turned to silver bars in numbers large enough to register in national import data. Now the same dynamic was beginning to stir in India, a market with its own enormous appetite, its own cultural gravity around precious metals, and its own freshly updated regulatory framework that had just made silver easier to hold, easier to borrow against, and easier to import than at any point in recent memory. And the banks that had just been handed their authorization letters were already making plans. There is an old saying among traders in the commodity markets that the most dangerous move any market can make is not the move that happens loudly in public view. It is the move that happens quietly, in paperwork, in regulatory offices, in government orders that never make the evening news. Because by the time the public sees the price reaction, the structural decision that caused it was already made weeks or months earlier, signed, stamped, and filed away in a drawer that most people never thought to open. The 17-bank authorization that India's Directorate General of Foreign Trade published on that April Friday was exactly that kind of move. It was quiet, it was bureaucratic, it was written in the dry language of government administration, and it was one of the most significant structural developments in the global silver market that the year had produced so far. To understand what was actually happening inside those banks the moment the authorization landed, a person needs to understand how precious metals importing works in India at the institutional level. The banks on that authorized list were not passive participants in the silver market. They were the pipeline. They were the infrastructure through which physical silver traveled from the mines and refineries and trading hubs of the world into the hands of Indian dealers, manufacturers, jewelers, investors, and the millions of ordinary citizens whose appetite for the metal had been building steadily through the early months of 2025. Without the authorization, that pipeline was closed. With it, the pipeline opened, and on the day it opened, there was already 8 metric tons of silver sitting at customs facilities across the country, waiting to move. 8 metric tons sounds like an abstract number until it is placed in physical terms. 8 metric tons of silver is approximately 257,000 troy ounces of metal. It is silver that had already been paid for, already transported across international borders, already physically present on Indian soil. The buyers existed. The sellers had delivered. The only thing standing between that silver and the market it was meant to serve was a piece of paper that had not yet been issued. And for weeks, the people who needed that paper had been waiting, watching the calendar, and growing increasingly frustrated as the delay stretched beyond anything that could be explained away as routine administrative timing. The frustration was not merely commercial. It carried with it a deeper anxiety that the traders and dealers closest to the situation understood very well. Every day that silver sat at customs was a day the market operated without supply it had already counted on. Dealers who had committed to buyers could not deliver. Manufacturers who had planned production schedules around expected arrivals found themselves adjusting timelines. The ripple effect of a bureaucratic delay in a market already running tight was not theoretical. It was being felt in real time by real businesses making real decisions. And when the order finally arrived, the relief that moved through the Indian bullion community was immediate and palpable. But the clearing of the backlog was only the most visible and immediate consequence of the authorization. The deeper significance was what it enabled going forward, because the 15 banks now cleared to import both gold and silver were not going to stop at clearing the customs backlog. They were going to begin building their import programs for the months ahead. They were going to establish supplier relationships, negotiate delivery schedules, and position themselves to meet what every serious analyst covering the Indian precious metals market believed was going to be a substantial surge in domestic silver demand through the remainder of 2025 and well into the years that followed. The reasons for that expected surge were layered and interconnected in ways that made the overall picture considerably more powerful than any single factor on its own. The collateral recognition that had come into effect on April 1st meant that silver was now attracting a category of buyer that had never previously engaged with the metal in a financial context. These were not traditional silver stackers or cultural buyers following generational habits. These were individuals and small businesses who saw in silver a newly useful financial tool, something that could be held as a store of value and simultaneously deployed as collateral within the formal banking system. That combination of cultural familiarity and newly granted financial utility was creating a type of demand that the market had very little historical data to model against. At the same time, the critical minerals designation was beginning to have its own quiet effect on institutional behavior. When a government classifies something as strategically critical, the institutions that operate within that regulatory environment begin to adjust. Insurance companies think differently about coverage. Banks think differently about lending against it. Government agencies think differently about stockpiling recommendations. The classification does not cause an overnight transformation, but it shifts the gravitational field around the asset in ways that accumulate steadily over time and eventually show up in demand numbers that surprise people who were not watching the regulatory environment closely enough to see it coming. And sitting underneath all of these structural developments was a global silver market that was already stretched thin before India had moved a single ounce through its newly authorized banking channels. There is a moment in the history of every great market shift where historians later point and say, that was the turning point. That was the day the direction changed. That was the moment when everything that came before it was preparation and everything that came after it was consequence. These moments are almost never recognized when they are happening. They do not arrive with trumpets and flashing lights and breathless news anchors interrupting scheduled programming. They arrive quietly, disguised as paperwork, dressed up as routine regulatory procedure, tucked inside government orders that most people scroll past without a second glance. And the people who recognized them early, who understood what they were actually looking at while everyone else was looking away, those are the people who history later describes as having seen what others missed. The India story unfolding in April 2025 has every characteristic of one of those moments. Because when the full picture is assembled, when every piece is laid out side by side in the same frame, what emerges is not just a story about banks and import authorizations and customs backlogs. What emerges is the story of the world's second most populous nation fundamentally and permanently repositioning its relationship with silver at exactly the moment when the global silver market has the least room to absorb a major new demand force. That combination, a structural demand shift in a 1.4 billion person market arriving into a supply environment already running 6 consecutive years of deficit, is not a routine market development. It is the kind of convergence that changes price trajectories for years, not months. Consider what the global silver supply picture actually looked like before India made any of these moves. The deficit that had been building year after year was already expected to widen further through 2025. Mine production had been stubbornly unable to respond to demand signals with the kind of supply expansion the market needed. Above-ground stockpiles that once provided comfortable breathing room had been drawn down steadily to cover the growing gap between what the world produced and what the world consumed. The cushion was thinner, the margin for error was smaller, and the market was already absorbing pressure from China's record import month, from growing solar demand, from retail investment interest returning across multiple geographies simultaneously. Into all of that, India opened its floodgates, and the water was already moving before most people had even noticed the gates were open. The 8 metric tons of silver clearing customs was just the first visible sign of a flow that the newly authorized banking infrastructure was being built to sustain and expand over the 4-year authorization period that stretched all the way to March 2029. The banks that received those authorization letters were not going to use them once and file them away. They were going to build import programs around them. They were going to establish relationships with international suppliers. They were going to create the institutional machinery that would pull silver into India on a scale that the market's current supply projections had not fully accounted for. The retail dimension of this story was equally powerful and perhaps even less appreciated by the analysts focused on the institutional side. The Indian consumer who had watched gold climb beyond comfortable reach was now looking at silver with new eyes. But these were not the same eyes that had looked at silver a decade ago. These were eyes that were looking at a metal that the government had just officially recognized as collateral, that had just been classified as strategically critical, and that the country's most respected banking institutions had just been formally authorized and equipped to deliver. The psychological signal being sent to the Indian retail market by this combination of official actions was clear and unmistakable. Silver had been elevated, and when something is elevated by the institutions that ordinary people trust most, ordinary people respond. This behavioral shift, from viewing silver as purely a cultural or traditional asset, to viewing it as a formally recognized financial instrument worthy of the banking system's official participation, was the kind of change that does not reverse easily. Cultural habits embedded over generations are powerful, but when those habits are reinforced and formalized by government policy and institutional infrastructure, they do not just persist. They deepen. They spread to buyers who previously sat on the sidelines. They reach demographics and income groups that had never previously participated in the silver market in a meaningful way. And in a country of 1.4 billion people, even a modest broadening of the buyer base represents a demand force of staggering scale. The global silver market had spent years absorbing pressure from multiple directions while somehow maintaining a surface appearance of stability. China had pulled in 836 tons in a single month. Solar demand was consuming nearly 200 million ounces annually, with no credible substitute ready to take its place. 6 straight years of deficits had quietly hollowed out the stockpile cushion that had once made the market feel more comfortable than its fundamentals deserved. And now India, with its ancient appetite for precious metals and its freshly upgraded institutional framework, was stepping back onto the global stage as a fully equipped and officially authorized buyer at precisely the moment when the market had the least capacity to absorb the additional demand quietly. The floodgates were open, the water was moving, and the people who had been watching the pressure build behind those gates for years understood that what had just begun in India was not a temporary surge or a one-time regulatory adjustment. It was the start of a sustained and structural shift in one of the most important demand markets on Earth. The kind of shift that shows up slowly in the data at first, then faster, then all at once, in a move that later leaves the people who missed the setup asking each other the same frustrated question that always follows these moments. Why did nobody see this coming? The answer, as it almost always is, was that the people who needed to see it had been looking somewhere else entirely. Thank you for watching The Hidden Currency. If this video made you think differently about silver and India's role in what comes next, share it with someone who needs to understand this story before the rest of the world catches up. Drop a comment below and tell us where you are watching from today. And if you have not subscribed yet, remember what we said at the very beginning. Think of it like locking your front door. You only regret the one time you forget. We will see you in the next one.